What else is ahead of us today with Chris Weston over at IG in Melbourne? Chris, thanks for joining us this morning. Let's talk about the overnight session. Obviously, Europe in focus with Wall Street offline. What did you make of it?
Well, I mean, some people make a reference to the Toronto market as well, given that it's very much a mining-weighted index, and that was up about 0.4%. I think our market will open pretty flat today. There's no indications as to suggest otherwise, but European markets obviously taking the good news about the ceasefire. We obviously reacted to that yesterday. The good news about the Chinese HSBC flash PMI numbers, obviously the best numbers, or the first time we saw expansion in 13 months. That's been widely publicised. So certainly from a psychological point of view, that's very positive as well. And I think European markets do very well. I mean, the DAX now up 4.2% for the week. So clearly there's a bit of short covering coming through there. Clearly the market's rejoicing. I think on Friday when Congress got together and left a pretty sweet taste in the market's mouth that perhaps the Republicans and the Democrats in different houses were probably a little bit closer than most people had anticipated. So I think European markets supported. If we look at the Aussie dollar and probably the currency markets as probably the best proxy for risk-on, risk-off appetite, and which could support our market. We have seen some good gains coming through in the euro dollar, euro yen a little bit higher. Aussie dollar just looks really stuck around that 104 level. We just can't seem to break that. It seems to be a bit of a ceiling in the short term at the moment, but it's up a touch from where we closed. The cash market closed yesterday. Obviously, people are looking at the SPI. The SPI closed at midnight, so there's no real reflection of how we're going to open. So a pretty flat open today. As you mentioned, there are a few AGMs to look at. David Jones obviously being interesting to see about what they've got planned for the future. And I think most of the data that we saw from Europe was relatively positive. In an absolute sense, the PMI numbers were certainly showing improvement, although they were just an advanced reading. They were taken from a previous reading. But it's important to remember that they're still very much in contractionary territory, and the Eurozone's got a long way to go at the moment.
Do you think Europe is necessarily going to start to provide some support for growth sometime in the future? Or have you got any ideas about when that might be?
Well, I mean, I think if you look at some of the rhetoric from central bankers, some of the investment banks that we look at and some of the economists, I think they see that 2013 you're going to see some stabilisation in some of the numbers. People are actually talking about growth coming through in Spain and by 2014. I'm not sure what you guys at HSBC are calling for, but I think in the new year we will see Spain request the assistance of the OMT. I think Mr. Olli Rehn's recent comments about the lower barriers to entry have been very good, about the fact they don't probably need to strike any new reforms, therefore there will be limited conditionality. Obviously we saw last night Spain getting away a very good bond auction where they're pre-funding for the first quarter of next year. They've already done their funding, so I think we can see some signs of stabilisation. The one that everyone's talking about, and I'm not sure about your view, but everyone seems to be getting quite excited about France at the moment, their debt profile and the fact that they haven't done enough reforms, that perhaps that's going to be the big elephant in the room for 2013 into 2014. We saw The Economist the other day coming out and saying that these guys are the next ticking time bomb. So I think that's something that we're looking at next year, and that's not priced in at the moment. So I think we can see some signs of growth. Obviously, everyone overnight was talking about the reforms or the budget side of things, but I think hopefully Europe's going to be one of those situations which is just going to be a calming influence. We're not going to see any major growth coming through there anytime soon, but perhaps we're not going to get that big issue that people are going to be pricing in, the potentially breakup of the Eurozone next year. I think we perhaps can kick that can a little bit longer.
Yeah, Chris, just quickly, your outlook for the Aussie dollar. I can see BNP Paribas saying they're long. They say they see it improving by the end of the year, more cash flowing into Asia. What do you think?
We're talking about for 2013, Kate?
Yes, that's right.
Well, I think it depends on how much traction this mining story we're seeing with the competitiveness and what's been happening there with these cost overruns and bits and pieces. If we really see that take hold, if terms of trade really do decline, then it'd be interesting to see what the RBA have to do to try and pick up the non-mining space, given the fact that we are seeing these signs of the housing turnaround. Macquarie are calling for 2% interest rate next year, which would see the Aussie much lower. I think the key here is the AAA rating. So I think longer term, I think 102, 103 would probably be my target for next year, but it could really go either way.
Okay, Chris Weston from IG, thanks for checking in. And Paul Bloxham from HSBC, thanks so much for joining us. We appreciate your time on First Business.
No problem.
Okay, we do have to take a quick break.